Welcome to the DA Davidson Consumer Growth Conference. For those of you that I don't know, my name is Tom White. I'm the Internet Services Analyst here at Davidson. Very happy to be here with the team from Mondee. The playbook here is that these guys are going to present for about 17 minutes or so, and then we're going to kind of fireside chat for a little bit, make sure we'll leave some time for Q&A at the end. So feel free to submit questions via the functionality that you have there, and I'll be sure to get them asked. But with that, I'm going to pass it off to the Mondee team.
Thank you, Tom. This is Prasad. I'm the founder and CEO of Mondee. Thanks for having us here. Let me give you a quick summary of our business. So we are a modern marketplace. We are disrupting a $2 trillion travel market with a Uber-like platform and a crowdsourced services. At Mondee, we are a high growth, a profitable value play company. We have $3 billion of gross revenue in 2019, and with a 40% organic CAGR with a 62% inorganic acquisitions that we made. We are a proven M&A platform. We have successfully acquired 14 companies, integrated them, got a 3 to 4 return, and achieved a significant synergies. We are coming to the market with the attractive valuation, which we're going to talk about that in the following slides. From the market size of it is a $2 trillion global travel market. Half of that is operating in self-service consumer travel side of it, which has already been disrupted, in 90s with the introduction of, the internet and the brands that operate in there, and yet it still operates in the low tech, no touch mode. On the other side, on the right hand side, there's a big $1 trillion market, which may be a little surprise to you with an assisted and affiliate travel. But this market do exist, and it's been operating in a very legacy old tech and with a high touch, very inefficient models. So we already did a transformation, a subsegment of this market, right hand side. We did the transformation and achieved sterling results. Now we are in the process of making a bigger transformation in the entire market. So if you really look into the trends that are happening in the market today, the gig travelers, we call it as millennials and Generation Z travelers, are really setting the pace for the change in the industry. So from boomers to Generation Z, the influence levels and influencers are primarily into the millennials and Generation Z in the recent times. And their needs are evolved, and the platforms and products that they would like to see is very different. So they want to work on most on mobile, conversational commerce, in their ecosystem. And the needs of these travelers and the evolving needs as it's going are not currently supported by the existing traditional players. We think this is a great opportunity, and we become a platform for these travelers between millennials and Generation Z that created this big traveler, opportunity. In addition to the macro trends and the travelers level, we are seeing the trends change in the channels also. In the travel affiliates market, the travel agents market is changing to a gig economy workers empowered by these home-based agents and part-time workers, the influencers, the social influencers, the various cohorts, it's changing it. And also with the small to medium to corporate market, the managed travel is changing more of a self-service travel with a cost-sensitive work from home, return to travel scenarios, and with the member-based travel. And the value-savvy consumers, the consumer market, from a generic broadcast distribution to a curated, very personalized content and omni-channel and subscription services. This is how the market is evolving. The channels of these consumers that we are targeting in this closed user setup is evolving significantly. So how we are different from the market? So today the traditional players are having a 2D marketplace. So they are connecting with the suppliers and offering services to the travelers. And what we are doing is we introduce this three-dimensional marketplace. The new dimension we are adding to the market is this crowdsourced service and curation platform. In addition to the changes that we are making, the other two dimensions, the primary thing is that we are introducing this crowdsourced services platform through which the travelers can get the services through crowdsourced gig workers, and the content being curated by these workers is being offered to our customers. On the other two dimensions, such as the channels and networks, we do not operate in the public market. We operate in the closed user group setup. We reach to the consumers through closed user groups, the clubs, the gig networks, the small to medium organizations. So we reach to those consumers and their ever-growing needs and their micro networking effect of that. So we are servicing to these channels. Because it's a closed user groups, we have a very differentiated content. We have this, in addition to the public content, which is available to us, like anyone else, the Expedia, Booking.com has it, but we also have this exclusive private content with the nature of channels and consumers that we are servicing to. And on top of that, we created this very powerful crowdsourced content and user-generated network, which is being offered by these gig workers. All these three dimensions are being supported by the latest and greatest technologies. Our underlying platform is a very conversational commerce, the fintech, the martech, the insurtech. All of these things are required in the current generation, to meet with the current trends of our customers and their channels. Just to give you a little bit background about Mondee. So we started in 2011. In the first 2 years that we have made a lot of acquisitions. By 2015, we have got a revenue of $25 million. We are talking about the net revenue, not the gross sale. And we launched TripPro product. One of our product is a technology platform that we offer to our customers. It has got 50,000 customer base, B2B customer base. Between 2015 and 2019, we have grown at a 40% organic CAGR. And with the acquisitions that we made in 2019 and 2020, with all the inorganic growth, we have a total of 62% year-over-year growth from 2015 to 2019. Most importantly, that we have increased our market share by 2.5 times. And that market share increase is attributed from our growth through our technology platform and the acquisitions that we made. So let me give you a little bit background about the revenue streams that we work on. Traditionally, our revenue streams are primarily on the customer markup and supplier commissions. However, in the last few years, we have expanded significantly into these other revenue streams that are very sticky. Ancillaries is one of the big things that got added, and we are really seeing a great progress there. And the fintech solutions, a subscription revenue, and all these new revenue streams that we get expanded into has increased our revenue margins and created a huge opportunity for the future in this new platform that we are working on. The other engine of growth here is the acquisitions. We are a proven M&A platform. We did total 14 acquisitions so far, 7 of them in the initial years, the other 7 in the recent years. And we have got stellar results of these acquisitions. We know the formula of how to integrate these companies and put it into our platform to make a good value to the overall system. Continuing with that, that path of M&A expertise, we have a very robust pipeline of some potential strategic, acquisitions out there. We are expanding into some of these geographical areas within the same sector of air. We are expanding into these cruises. We are expanding in technology and distribution side of it. By having these acquisitions, helping us to, in each of these areas of our three-dimensional marketplace, could potentially bring an additional $225 million of revenue, which is not being underwritten in the current case. But this is just a additional thing that we are planning to get on as soon as that we close this transaction and acquire these companies. In order to execute these plans, we needed to, the time to market is very important, and we need to have a vehicle like a public company in order us to capture the market and take this this M&A activity going and to grow our public plans. So we have explored our options. We came across the SPAC option and with the ITHAX acquisition Corp. And the players of this ITHAX SPAC, they are from the industry. They know they are from the very savvy in the industry with the private equity background, and the chemistry is so good. And we think that combined as a team, we can make a big difference and execute our plans. With that, I would like to hand over to Orestes, who is the CEO of ITHAX Capital Group. And Orestes, here you go.
Thank you, Prasad. I'm the CEO of the SPAC. My name is Orestes Fintiklis. Like Prasad said, the sponsors of ITHAX are driven and dedicated to travel and hospitality. I'm the founder of a private equity fund that only invests in this sector. And then Axia, our co-sponsor, is a boutique investment bank with a lot of experience in the sector. So we clearly have expertise here. And the main reason that we have raised the SPAC, as opposed to focusing on the value private equity investment sphere where we operate, is that during COVID, we saw a clear opportunity with public market valuations in travel, trading at historic highs, despite the adjustments in the revenue streams of all these companies. But then yet in the private domain, you could transact at significant discounts. This created an arbitrage opportunity, and we raised the SPAC as a one-off strategy to take advantage of this arbitrage between public and private valuations, and Mondee clearly falls within this strategy. In terms of the transaction, is fairly straightforward. We are valuing the company at 10.5 times 2023 EBITDA. I will just highlight 2 points. The first one is that we did close in December an all-equity pipe at $10, which is very unique given the challenging environment to raise pipes in this market. We didn't give any discounts. We didn't give any special terms. It's not a structured product, so it's just an equity pipe at the same terms as the SPAC investors, which validates the valuation and the strength of Mondee. And then the second point I would highlight is that there is no money exiting the company. The SPAC and the pipe is capitalizing Mondee to further its M&A strategy. It's very simple in a sense. We are bringing the company to market at 10.5 times EBITDA. We are going to acquire with that capital smaller players with less technology at 6 to 8 times EBITDA. And then we feel that based on the comps, we're going to trade at 15, 16, 17 times EBITDA. This is the team of Mondee, a very talented team with experience in both technology and travel. Nobody's exiting, so they are very well incentivized to execute the organic and inorganic growth of the company. In terms of an underwriting, we underwrote this as a private equity value play, which is very different from some of the hyperbole you may have seen in the market in the last few months or years. We are valuing based on an EBITDA multiple analysis, which very few SPACs have done. And more importantly, we have only made 2 assumptions in constructing the 2023 EBITDA. The first one is that travel will recover in 2023 to the 2019 levels. We think that this is the industry consensus, and for this particular company is very conservative because the distribution channels of Mondee are mostly in leisure travel, which is recovering much faster than corporate travel. The second assumption we made is that the revenue per transaction is going to grow from $31 in 2019 to $42.6 per ticket in 2023. This is no longer an assumption, it's a fact. In 2021, we have just closed the books. The revenue per transaction, due to the diversification of the revenue streams that Prasad has mentioned before, not only we met our target 2 years earlier, but we eclipsed it by 20% with a $52 revenue per ticket in 2021 already. Here you see why our 80 million EBITDA is so conservative. First of all, it includes a $42 revenue per ticket assumption. When we are already at 52, this adds another 35 million of the EBITDA. We presume no growth in market share. You have seen how every few years Mondee is doubling or tripling its market share in the private airfare wholesaler market. It's very reasonable that it will continue to do so, which adds another 20 to 30 million of EBITDA with a very modest growth of 2 to 3% in the market share. We have discussed about the subscription products. Some of them, like TripPlanet, have tens of millions of users already, and we haven't assigned any value in the underwriting. Again, assigning a very conservative value there adds another 20, 30 million of EBITDA. And then, of course, the M&A, which is the main use of proceeds, is bound to add some EBITDA there as well. So basically, in a blue sky scenario, we're looking at an EBITDA of over 200 million. We have underwritten based on an 80 million EBITDA analysis. Here is the slide where we showed the historical financials and the projections. This is coming directly from the PIPE deck, based on which we raised the all equity PIPE. As you can see, I'm just highlighting one point here. We underwrote based on 65 million net revenues in 2021. We already overperformed that by more than 40%. We have the audited numbers coming in. We added them here for full disclosure. It's more than 90 million of net revenue. So in the same way that we have outperformed 21, we feel confident that we're going to continue outperforming the financial projections based on which we have underwritten the transaction. Going to the comp set, Mondee is a technology company, so we could have credibly used companies like Uber. It's an Uber-like platform, or Netflix. It has a lot of subscription products. Instead, we are using the incumbents in our comp set. The incumbents are the two-dimensional marketplaces that Prasad has mentioned, the Expedias, the Bookings of this world, is the legacy distribution systems, the GDSs, Amadeus, Sabre. So we're using those players as our comps. As you can see in this slide, the bottom part of the slide, these players are growing by 7, 10, 13% annually in the 2015 to 2019 period. Mondee is growing at 40%. Despite that, and even though we're growing 5 or 6, 7 times faster than the comp set, you see our valuation analysis on an EBITDA minus CapEx. So adjusting for the CapEx to create a proxy to cash flows, we are at 11 times EBITDA. These players are trading between 14 and 21 times EBITDA. At the time when we announced the transaction, we had about a 30% discount to this comp set. Now we're closer to the 50% mark because, as you know, in the last few weeks and since the end of the year, there has been a rally in travel stocks, which is one of the few trades that has worked since the beginning of the year, and it has widened the discount to the comp set. Now, if you look beyond the marketplaces and the travel technology companies at the entire travel space, even if you take traditional players like hotel operators or cruises, take a hotel operator, the average hotel operator is trading 15 times 2023 EBITDA. The average hotel operator is growing 4%, is 3 times levered. Mondee is growing 10 times faster at 40%, by far less leverage, and we're coming at a 10.5 times EBITDA. So the point here is that Mondee, not just within the travel marketplaces and technology companies, but the entire travel space is possibly one of the best risk-adjusted trades if you want to take a position on the recovery of the travel market. So to summarize, as experts in this field, we think that this is the most compelling travel tech story out there, which combines, number one, explosive growth. This company has disrupted a certain segment of the market and is very predictably going beyond flights to hotels, cruises. And then in terms of distribution, it's going beyond travel affiliates to gig economy workers, small and medium-sized enterprises, and subscription products. So you have the growth there. Number two, you have the value. It's a company with an existing EBITDA, an existing revenue, and a proven business model, which has already disrupted a certain segment of this 1 trillion segment market. Number three, you have accretive M&A. So the use of proceeds are going into the company at a lower EBITDA multiple. We are bringing the company to market at 10 times. So there is an immediate accretion and then an even higher value driven by the conversion in the multiples to the 15, 16, 17 times EBITDA of our comp set. And then last but not least, we have a very compelling valuation, which is becoming even more compelling as the travel recovery story is advancing. So thank you very much for listening. We are open to questions.
Okay. Terrific, guys. Thanks for that. It was very helpful. Anyone who's listening would like to pose a question, just submit it via the functionality there at the bottom of your screen. I'll ask a couple here just to kind of get things going. So Mondee is, I guess, the name for the holding company. Can you guys just touch on and elaborate a little bit more on kind of the individual products and brands kind of within the Mondee portfolio?
Yeah, so we have multiple brands that we operate with. Some of those brands that we got it through our acquisitions. But as far as the product lines, the main products brands are concerned, there are 4. One is a TripPro, which is our gig platform. We have over 50,000 agents and travel affiliates out there. in that platform, and it's growing substantially. And in Rocket Trip is our large enterprise platform. We have customers such as BMW or a Twitter and all as working with that as a customer, the travel spending saving tool. Trip Planet is our new platform, which we launched it in summer of 2021, and it has taken really a great adoption in the market. We have over 4 million members signed up for it, and we are doing that for a closed user setup with the member organizations, small to medium business and non-profit organizations, and got a great potential to grow in the future. Unpub is another brand that we have it, which is a subscription-based product where the people can join the subscription and become a member of that, get the value in terms of the packages it provides and the value it brings to the customers. So these are the main brands that we operate from the technology point of view, and we have other brands from the underlying, the companies that we acquired.
Great. And then, for folks who are listening who might be a little bit more familiar with some of the kind of consumer-facing brands when it comes to online travel and online travel marketplaces, can you maybe just double click on kind of the big areas of differentiation between, say, your business model and kind of, what products, you're exposed to relative to, say, the Booking.coms of the world, the Expedias of the world?
So, Orestes, you're going to answer that? Sorry,
yes, I'll take it. I'll take it. So basically, the bookings of this world and the Expedias of this world, there are two-dimensional, effectively, marketplaces that they just sell, the full published rates with no customization, very limited technology, and very limited service to the consumer, right? The differentiation of Mondee is that Mondee is introducing a third dimension to these old two-dimensional platforms, which is effectively a service through a crowdsourced gig economy workers in an Uber-like platform. So you have basically the end consumer having an app, which is a basic consumer app, which is linked directly, just like Uber, to the driver app, bringing basically a unique service, but also a unique curated content. So this is the third dimension that Mondee is adding to the two-dimensional old marketplaces. Now, existing two-dimensional, to the existing two dimensions, Mondee is leading change in the following way. In terms of distribution, most of these names that you have mentioned, they sell directly. They broadcast to the whole world a full price rates. Mondee is not selling directly to the whole world. Mondee is approaching the consumer through closed groups, whether those are travel agents or gig economy workers or small and medium enterprises or subscription models. Mondee is targeting very specific groups, which not only reduces its customer acquisition costs, but more importantly, on the content side of the business, the suppliers of travel, like the airlines and the hotels, they are much more comfortable giving Mondee access to negotiated rates that you cannot find on the bookings or Experience of this world, because we are not competing with the distribution channels of the airlines. We are actually helping those players distribute their excess capacity through channels which are not competing with their own channels. And then in addition to the content side, we, in addition to the value proposition on the content, we can curate the content through this third dimension, which is the gig economy and crowdsourced element of the equation. And all that in a modern marketplace, which works on a smartphone, which works on all modern payment solutions, which provides fintech, insurtech, conversational commerce in a comprehensive package, which creates what we call travel solutions in a box.
So Tom, you might just summarize that quickly as, we represent an opaque channel for the suppliers that is very targeted. For anybody, any players in the middle, we represent a micro networking opportunity with a very efficient set of modern platforms, as Orestes described. And for the consumers, we are giving them crowdsourced, fully curated, completely experiential content that is very well priced. So we're hitting all three pieces of the value chain.
Exactly. And in terms of size, something that we haven't highlighted enough is that This is the market leader in this segment of the market. In 2019, there were 50 million searches per day on the Mondee platforms that sold 5.2 million flights in that year, which is very comparable to the flights volume of some of the largest online travel agents out there.
Question on some of the sort of assumptions in the forecast there. You talked about kind of the revenue per ticket results and kind of what you'd baked into your underwriting case, Orestes, when you guys looked at this. What's driving the big increase there?
Yes.
Is it increased price of like the underlying ticket, like the airlines are just sort of charging higher rates, or are there other things there?
There is a small part of that, but for the most part is the diversification in our revenue streams. So if you look at this chart, in 2019, what were our main revenues? It was a markup on the flight. Say we bought the flight for $800, it's $1,000 on the OTAs. We get it at a better value because, of the closed groups we mentioned, which we mark up by $50. This is the markup, right? And then we would also get, which is the yellow and the blue part here, we would get some economics from the suppliers, right? Depending on the volume. This was our main business traditionally. And this is the basis of the $32 per ticket that we achieved in 2019. What has been happening, we have been adding revenue streams, which are not only more recurring and sticky, but they are by far higher margin. What do I mean by that? We added ancillaries, checked-in luggage, for example, or travel insurance. Travel insurance was notoriously very difficult to sell through affiliated platforms. Through our tech solution, the travel agent or the travel affiliate can now sell travel insurance. We keep a big part of the premium without any cost. Fintech solutions, V-cards, payment platforms for our affiliates and our customers. So this diversification in revenue streams is what we were projecting was going to lead us to a $42 per transaction, right? Based on which we underwrote this 265. But guess what? We are already at $52 in 2021, not in 2023, because these ancillary revenue streams are proving to be by far more successful than we anticipated, and they continue to grow beyond this $52 mark that already eclipsed the 2023 projection by 20%.
There's a question here from the audience I want to make sure I get to, just on how COVID's impacted the business and kind of, how the strength of the recovery that you guys have seen. Like, when do you kind of get back to normal, so to speak, like pre-pandemic levels of
Yes.
Yeah.
COVID had two types of impact. Obviously, it had the short-term impact. I mean, it was a transformational event in the sense that most of the flights were grounded. So it had a huge impact on our, on our revenues, and you can see it here on the P&L. But at the same time, it transformed, it accelerated the transformation of the industry. What Prasad was mentioning before, for example, the traditional travel agent working in an office with many people was already changing, with many people working from home as part of the shared economy. This movement to gig that you see everywhere in food delivery, in driving, etc. So this was accelerated by COVID because many of the big firms, they either laid off travel agents or they left on their own as a personal choice, which expanded the possibilities and fragmented the segment even more. So COVID was effectively, ironically, in the short term, it had a very strong impact on the company, but it has accelerated the very trends which are making Mondee the market leader, right? In terms of market recovery, like we discussed, we are projecting that in 2023, we are going to get to the 2019 levels, which we think is very conservative for this company because this company is mostly leisure travel. The consensus is that by 23, the average travel, including leisure and corporate, will return to the 19 levels. So when we're talking about Mondee, we think that we're going to return to those levels much faster. Testimony to that is the 2021 numbers. You see that we exceeded them by more than 40%. And then 22 is continuing along a very similar trajectory.
Perfect. Well, I think we've run out of time here, but just wanted to thank you guys for the run through and for providing the color and the detail. Look forward to keeping an eye on this one. And if anyone has any questions, feel free to reach out to me, or we can patch you through to the team at Mondee. But with that, we'll end the session. Thanks, guys.
Thank you so much. Yeah. Bye-bye.
Thank you very much.